And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the market forecast for Thursday, September the 8th. My name is John Hoagland. Thanks for trusting me with your time this morning. As always, our focus is on accurate context, good risk management, and remaining patient in our trading. Happens to be School Picture Day, National School Picture Day. I am not going to show you any of my school pictures. And of course, if you're already in the market, hopefully things are going your way. We do have some economic information and Fed speak today to keep our eyes on. Already this morning, 7:15, the ECB raised their rates 75 basis points, one of the largest, if not the largest, boost in their history. Markets kind of responding to that already. We've already had our jobless claims come out this morning. The initial jobless claims last month was adjusted, but last week was 232,000. They were looking for 240,000. It came out 222,000. So a nice drop in initial jobless claims, continuing jobless claims. However, we're a little bit higher than expected. At 8:10 this morning, we're waiting for the chairman of the board, Chairman Powell, is going to be speaking. 9:30, the nat gas numbers come out, and 10 o'clock, the petroleum status report comes out again due to the holiday on Monday. So just kind of looking at stocks, they were kind of pretty much just holding steady. They're off a little bit this morning after the early numbers. Not by much. I mean, the Dow is down 0.05%. You got the Nasdaq down 0.3%. E-mini S&P is down 0.2%. Nothing big as far as the downside is concerned here. We do have the stocks basically holding those gains from yesterday. A lot of hopes for a soft landing for the U.S. economy, on helping probably a little bit with those lower crude prices, which crude prices have kind of held steady after the API announced a 3.5 million barrel boost in inventory last night. The EIA forecasts are for a $250,000 drop in crude stocks here in the U.S. We'll have to see. So the ECB was expecting a rate hike. They got their rate hike again, their biggest rate hike ever. Euro bet is back above parity as the dollar has slipped off its recent highs. VIX this morning up a little bit, 24.86. The dollar index a little bit lower at 109.55. And the yield on the 10-year off that high from yesterday, I think it was, 3.5%. It's about 3.2% as we speak, or the last time I checked. And as always, if you like what you're seeing, make sure to hit the lucky like button. Share, comment, question, feedback, heckling are always welcome, as well as love. Subscribe to our YouTube channel if there's something that we're missing here on the market forecast. Tell me, Jay Hoagland at topstep.com. Is always going to say good morning to everybody. We got Scott Saw and he conquered this morning, first one in the room. Dark Kevin, my brother Rick, love you. Or Mr. Rocky, Shaw Cunningham, still on September, Shaw. Next week is a big week for rollovers. The scheduled rollover for our equities is on Tuesday. There's been a little bit of a change in the procedure, apparently. Rollovers always used to be on Thursdays. So next Tuesday on the schedule here, I have equity index roll. The following day, currencies roll from September to December. And then on the 15th, we've got the crude oil rollover. So crude coming in to roll, equities and currencies into roll. Of course, our treasuries have already rolled into the December contract. Good question, though. Just check the volume. Volume's still much higher in the S&Ps and in the Nasdaq in the September contract. So we'll be talking about that early next week and talking about which data to switch over. It's never really a finite date. We just watch the volume and pick a day. Orion, good morning. Dan Trader, good morning. Dario, Terry King, JST Wave, Jules. Good morning. All remember, discipline equals freedom. Tanya, good morning. Scarlet of Arachnid, good morning, good morning, good morning. Mango Heist. Rob T, good morning. Brody, Patrick, Steven C. Serenity Trader, good morning to you. Chilling with Dylan, morning you all. Back from much needed vacay and feeling refreshed. It's always nice, isn't it? Chilling with Dylan. It's good to get away. And it's good to get back. David, good morning, DA. Jerry is awake. Mr. Rooster, Marcelo, Unicus with his morning quote. Success is going from failure to failure without losing your enthusiasm. It's a Winston Churchill quote I know well. Thank you very much again for posting those, Unicus. I know I really enjoy them, and I'm sure everybody does. Dimitri, good morning, guten Tag, guten Abend. Three Lions, Rusty Golfer, Alfred, Kyle, Vince, good morning. Cine Style, morning. Are we going to be streaming Powell or commenting on the stream for it? Well, it's going to be at 8:10. It's Make Hogue Money Day, so we're going to try and be done here on the forecast by about 8:15. So we'll probably be here when we do see any reaction in the markets. Won't really have time to comment on what is said or anything because, again, we're going to move on to Make Hogue Money. So Powell may make Hogue Money a little more interesting. And a little more interesting than that, I've got a very special guest that's going to be joining me this morning. Our good friend Anne-Marie Band is going to be joining me this morning for Make Hogue Money. We'll see what we can come up with. Of course, you're still going to be voting. You're still going to be part of the decision-making for any trades that we're going to make. Always a pleasure to spend some time with Anne-Marie. Haggle Matters, good morning. Sarah Hall, good morning. Prayers and love to you as well. Dimitar, Jan R., good morning. John, Dr. VJ, Eric Hill, love it. Unicus, Olaf, good morning. Ron, Trading Research, Will Hawks, and Khalid, good morning to everybody. So we've got Make Hogue Money today. Let me put the link into, hey, Lacey's saying hi. If you can see this schnoz right here, she's moosing me to get pet. So I'm going to see if I can't pick up this Make Hogue Money link if Lacey will let me, and I'll put that in the chat so you can come into the Zoom meeting. We're going to be presenting it on YouTube, but you won't be able to vote. If you want to vote, come in, get the link, come to our Zoom meeting, and you'll be able to vote on these trades. Plus, there's about a 10-second delay from live to what you see on YouTube, so that's maybe a little bit annoying for some. When is ES rollover is scheduled for next Tuesday. Next Tuesday is the 13th. Currencies the 14th. Crude oil the 15th. Just keep coming to the market forecast. We'll be discussing that, and I'll let you know when I'm going to be moving over. I base it on, basically the volume. When the volume increases greater than September in the December contract, I'll be moving over. But just keep coming to the forecast. I'll let you know when that's going to happen. Okay. All right, I think we're done with that kind of business. Let's dive into the S&Ps here and take a look at what happened yesterday. I'm not going to be streaming the Powell speech. It'll be on at the end of the forecast, and we'll be moving then swiftly into the Make Hogue Money section of the morning this morning. So won't be streaming it or commenting on it. It'll happen right at the end of the forecast this morning. We'll see any responses in the markets, but we won't have the opportunity to stream the whole thing or really be able to comment much on it. I won't have the opportunity to really read through it all that much. So we're about to jump into the crude oil S&P daily. we were really interested in seeing what happened to yesterday on the recap. How much open interest did we add? Let's dive in and take a look at these charts. Okay. We've been talking about this day as being a very important day. In that zone, it is still seems to be a very important price level. Buyers yesterday piled in again in that zone, adding approximately 35,000 in new open interest. That's not short covering. That is buyers coming in to buy this market. Volume wasn't all that tremendous, but it usually isn't on up days. It was a little bit of an uptick, a little bit of a small downtick, I think, in New York. Not really worried about that. I'm more concerned about the amount of open interest that we added yesterday. Now, if we did add a whole bunch of new longs and we don't see continuation to the upside, those longs may get trapped if we start to continue to push lower. And so much of this depends on all of the uncertainties out there that remain, and we all keep them kind of in the back of our mind, but we know that traders have very short memories. So if nothing bad happens today, if Powell is easy on his speech, which who knows how that's going to go, I'm looking for an opportunity to buy a weakness at some point in here in the S&Ps. Yesterday was like one long spike. It didn't happen at the end of a move to the upside, so it's kind of a healthy upside auction view for us. Let's take a look at the 30-minute chart. So, what was today? Wednesday, Tuesday. I was kind of looking for what happened yesterday. It didn't happen. Yesterday, we opened, leave the opening range below the session. We continue to push higher and higher all day. There was no true area of real balance in here yesterday. It was basically just one big push to the upside created by multiple time frames. Now we're starting to come off here. When we had the overnight inventory, looking at it, it was largely flat. There was very little pullback off the high from yesterday. The visuals above, we've got a naked point of control from last Friday. Visuals below, well, we've got a lot of potential for repair from yesterday's range. Yesterday's range was very emotional. You can see how toothy it was on the volume profile here. So when we open in this area, the market is likely to repair. Come down to a high volume node here and trade to another high volume node up here. It's appearing like the market is trying to open with some sort of repair. If things get in trouble, we've got a whole bunch of new longs that could start to sweat a little bit. Now remember, this zone here is where we saw the last big boost in open interest that created this big move to the upside. We're back in that level. So I'm going to be, of course, trying to be patient. We've got Make Hogue money today. We got Anne-Marie going to help us with Make Hogue money. And we're going to be looking for opportunities. And the market is still seeking balance. Overnight balance has broken. We're back into the imbalanced range from yesterday. Be looking for opportunities as the day goes on. Maybe better trade locations as the day goes on. We're going to have to go ahead and see. Anything can happen. We're still looking for Chairman Powell's comment. I mean, that's really the only real economic information that we know is going to be coming out, and we don't even know what he's going to say. Well, maybe a little protection from some of these longs down here. Really just kind of opening in range and in value. The value is not real strong because, again, the market was moving, was out of balance. If there is a degree of balance in value, I'll look for high volume nodes to look for opportunities for entries because I can limit risk on those. Let's take a look at crude oil now, and then there's a pretty big difference between the Nasdaq and the S&Ps yesterday. I'm gonna go over that here in just a minute. So yesterday we broke out below the balance area on the open, leaving the opening range the high of the session. We actually took a trade in SIM in the market forecast yesterday, which I rarely ever do. turned out to be a pretty decent trade for about $1,200. But by the time we ended the forecast, and we saw some continuation to the downside. We added 31,000 in new open interest on the downside on higher volume. We do have a measured move that I've left here that takes us down to about 77.80. We're waiting for the EIA petroleum status report, and as always, anything can happen. What are we looking at here on the 30-minute chart? Here's our big move to the downside yesterday. Overnight inventory maybe starting to look a little bit long. Okay, if we're going to be opening in range and in value, there's the opportunity for some repair inside of value. We did have a late spike yesterday. So the late spike base, I'm going to bring this up here on the TPOs. So 81.94 was settlement right about here. Here's our late spike yesterday. What is a late spike? A late spike is when price excuse me moves quickly. It looks like we've got an opening range trade to the upside here going on. When price moves quickly at the end of the day and doesn't have time to show acceptance through time, that's what we call a late spike. So the 1 o'clock bar, the 1 o'clock to 1:30 bar extended the range lower and closed down there. That's a late spike. The base of the late spike we were looking at here is 82.19. We've opened above the base of the late spike and even above the beginning of the late spike, which was 82.52. That's rejection of lower pricing. We can see already that the market has, I think, probably left the opening range at the low of the session and is now inside range and inside value, just seeking two-sided trade where buyers and sellers are comfortable conducting business. I'm going to stay real patient today, wait for the extremes of the initial balance, and look for opportunities at those extremes. Let's take a look at the 1-minute chart here. Well, here's the 8 o'clock bar. It's not showing. Opening range. Some reason it's not on there, but I'll fix that later. Here's the 8 o'clock bar. So our opening range is the low of the session, and it's a rather extensive one, 82.55 to 83.11. So we're looking at 50 some ticks here of the opening range, but the opening range leaving it at the high of at the low of the session, back into value. Okay, so kind of starting outside of value, moving back into value. All right, let's go move on here and let's take a look at the Nasdaq, which is similar but different. Always similar but different between the Nasdaq and the S&Ps. Open interest indicates more of a short covering session yesterday than new longs coming into the market the way it did in the S&Ps. We lost approximately 4,600 in open interest in the Nasdaq, where again the S&Ps added 35,000, losing 4,600 versus adding 31,000, 35,000. So this looks more like a short covering event than a new longs. The market is back to that same area, that same zone, that same range of the day from July the 19th. Got a lot deeper in it in the Nasdaq. There's still many uncertainties out there. We have to be aware of that. We know Powell's going to be speaking. Economic data we've already got. Markets, traders have short memories. Let's take a look at the 30. So again, with no real overnight inventory, we do not have a late spike. However, we're going to be opening up pretty far off those highs. What happens before the open can be somewhat a little bit telling. It's kind of like an opening call, right? So the market is opening back into range, back into value. I'm going to be looking for potential opportunities for repair. There's lots of kind of holes in these profiles from yesterday and opening inside value would lend us towards thinking maybe we'll get a move back down towards point of control and a move back up here towards this high volume node that we're looking at here. So, this morning looking early, there was very little give back. We're seeing some give back now. See what Powell has to say. I'm looking at potential repair now instead of, finding continuation to the upside, creating a gap and looking for areas higher. We're going to be looking for areas back to the downside, levels back to the downside, and trying to be patient because opening in value does lend towards better trade locations as the day goes on. All right, let's take a look at gold now. Finally, we're getting a little help from buyers in gold. We did try and test down to this swing low. We couldn't quite get there. Last week's low was supportive yesterday. Volume was pretty good on this up move. We lost 1,600 in open interest. So again, instead of looking like the market has turned and we've brought in buyers, it looks more like it's just a short covering event. Last short covering event was this bear flag. Are we creating another bear flag here? Kind of rangy, kind of complicated for a real bear flag, but it is entirely possible. If we do continue to the upside today, that's going to create a kind of a potential medium time frame market state change, and we've been kind of wondering if we're going to end up putting in a W bottom here. Anything is, of course, possible, and anything can happen. We need new business to continue to push this market higher, which we did not see yesterday. We're always thinking, what direction is the market attempting to go? How good of a job is it doing getting there? I would say the attempt to the upside yesterday was rather hollow because of the lack of an increase in open interest. Here's the 30. Okay, we did open with a gap. We closed that gap immediately. We are back in range and value. Value area special situation play is quite possible. In other words, we've opened out of range and out of value, coming back into and accepting value from the previous session and increases the probabilities of price actually reaching the other extreme of value from the previous day at some point today. At some point today. Initially, I believe the opening range was left at the low of the session. That has now fallen. And now we're back in range, back in value. Vince, look for the value area special situation play. Maybe you'll find a good opportunity in that. We did have a late spike. We opened above the late spike, but we've rejected that higher pricing. We've rejected that higher pricing. Now the new nuance, the new special situation would be value area special situation. Take a look at the euro, which is still teetering on par, on parity with the dollar. We had a pretty good move here in the overnight. Still range bound, right around that parity level, that par level with the dollar, right around 1. Open interest, pretty good boost off these lows from yesterday. We added 2,900. Euros overall, I think the open interest has been somewhat waffling. Let's go here. So, kind of similar to really our equities. We didn't really have any overnight inventory. We're coming back into range and into value. 730 bar. It looks like we opened out of range. Now we're back in value. Value area special situation is entirely possible. Yeah, Rue, I did the Nasdaq already. Sorry if you missed it. Powell, yes, Powell is beginning to speak in 1 minute. So, in the euro, we did add some open interests, and we are really wrestling with this par. Our extreme low here yesterday was rejected. We're still largely range bound and short time frame controlled here, ladies and gentlemen. Even with the additional 2,900 in open interest, we're still range bound. My focus is really going to be on the extremes. 10-year. So we had a close below weekly kickoff low on lower volume. Yesterday we brought all that price back. We've put in a bullish piercing pattern here as far as candlesticks are concerned, and we added 56,000 in open interest yesterday on a push back above this level. We had a pretty good push above higher before the open today. Let's take a look at the 30-minute on this. So, I mean, like the equities, like the gold, every market that had a good push to the upside yesterday is experiencing some pretty good push back. We opened with a gap. We've closed the gap. Value area, special situation play is quite possibly in play. We've traded straight to the value high from yesterday. Upon acceptance inside value, that makes the market more likely to trade to the other extreme of value, which could provide us with a decent opportunity. I am too, Anne-Marie. I'm looking forward to it. All right, let's get through the natural gas. There's something I want to ask everybody about this natural gas. Downside auction yesterday did not present as very strong. We lost about 2,900 in open interest, even though volume was pretty good. There was nobody willing to take that next step and to come in and continue to sell this market. So asking ourselves, how good is the market doing? It didn't do very well to the downside yesterday. We've got an inside extended trading hour range today, and we've got these swing lows back here that really look kind of interesting for a potential supportive level. Here's the 30. Yesterday, range bound, no real overnight inventory, kind of getting a push back to the upside, which would make sense if the auction to the downside isn't doing all that well. It looks like we've already, I mean, if we did open below value, we've already gone all the way through value from yesterday. We're starting to think we maybe need to look for opportunities to buy weakness, but only against levels that we can limit our risk. What the heck was this? This is a 1-minute chart. This is what 7:03 yesterday morning till 7:14. This is 500 ticks. Even before the open. My brother calls this barcoding, but I have never seen something like this. Look at the volume. This is a 1-minute bar. 500 ticks. Think some algo went nuts? I mean, look at the volume there. Look at the volume through the entire session. Nothing. Just wondering if anybody knows what the heck that was. So, Powell speaking. Huh. Who knows what's going to happen? I'm just going to keep an eye on the S&Ps here while we finish up. I have to check my Twitter feed to see if there was anything new that he had to say. Not seeing too much on any of the other feeds that I look at here. All right, we'll have to see what happens. They're more talking about the ECB presser right now than Powell, we have to see how this plays out. So, all right, everybody, I'm going to go ahead and get ready for Make Hogue Money. I'll try and have everything up and running by 8:20. We'll take a look at what's going on with the opening range trade. We're going to have our special guest, Anne-Marie Band, with us, so we're going to see what's going on. Yeah, we can do have a nice little rate hike spike here. Looks like about 6 basis points after this 8 o'clock number here. So we'll see what happens. All right, let's get ready for Make Hogue Money. Take your deep breath. Hope to see you there. If not, hope you have a great trading day. There won't be any recap today. We'll have the podcast with Dan and Jack, and then tomorrow's market forecast, and that's going to be it for me for the week. Trade well. Take your deep breath. Stay humble, grateful, and creative. Remember, trading is as much about being creative as it is being a scientist. It was a great quote I heard once. Being a trader is having the mind of an engineer and the courage of an artist. So we're going to see if we have the courage of an artist and Make Hogue Money today. Looking forward to seeing everybody. Anne-Marie, looking forward to seeing you. Let's have a good one. Trade well, everybody.